In the latest news for NVIDIA, the RTX Pro 5030 Blackwell GPU has become generally available. In industry standard benchmarks for generative AI, the RTX Pro 5000 offers 3.5 times the performance of prior generation NVIDIA hardware. For image generation, just prior to this, NVIDIA also debuted the Neutron 3 family of open models. But for me, the biggest news of the month for NVIDIA has been on the US regulatory front. On December 9th, US President Donald Trump announced that NVIDIA is allowed to once again sell their H200 chips to China. This decision has come in for criticism from analysts who argue that selling a more advanced artificial intelligence chip to China will significantly boost Beijing's capabilities. Rush Doshi of Georgetown University stated that China already has an edge over the US in electrical power engineers and other areas, and compute is the main advantage. By giving this up, we increase the odds the world runs on Chinese AI. But there are a few important things to mention. First of all, this deal is for the sale of H200 chips to China and other countries, not the sale of their latest generation Blackwell chips. NVIDIA has created a less powerful chip called the H20 to comply with US rules, but that had to halt shipments to China earlier this year. Secondly, NVIDIA is now considering increasing H200 chip output due to Chinese demand. This is interesting because it comes at a time when China is pushing to promote its own domestic AI chip industry. But H200 performance is approximately 2 to 3 times that of Chinese-produced chips, as domestic chip companies have yet to produce products that match the H200. There have been concerns in China that allowing the H200 into the country could hinder their industry, and maybe that is actually part of the strategy by allowing an older generation of chips at a time when the current generation is due to be superseded. The Chinese government has yet to greenlight any purchase of the H200s. They called an emergency meeting to discuss the matter and will decide whether to allow it to be shipped into China. Back in April, NVIDIA said that the ban on sales to China would cost the company about $8 billion per quarter. That was based on the H20 chips they were shipping at the time. Now NVIDIA would be able to ship the H200 chips. Not only is the H200 much more powerful, but it also costs significantly more. I don't know the exact figures, but the H20 chip was priced somewhere between $12,000 and $17,000. Now, 2026 will be a big year for NVIDIA. It will see the launch of NVIDIA's latest chips. The Rubin platform is expected to launch in the second half of 2026 as the successor to the current Blackwell chips, while analysts are expecting a late second half launch. Based on NVIDIA's historical timelines over the past 5 years, we could see Rubin arrive a little earlier than expected. Trial production has already been underway for several months. So what do analysts think of NVIDIA stock right now? NVIDIA is covered by 53 Wall Street analysts. 50 have issued buy ratings, 1 has a sell rating, and to have hold ratings. The consensus price target is $260, with a high forecast of $350 and a low forecast of $205. Out of all 53 analysts, there is not a single price target below the current price. Even the lowest target of $205 is still about 15% above where the stock trades today. Some of the most recent price targets were set just recently, including targets of $275 and $350. Another very bullish analyst on NVIDIA is Wedbush's Dan Ives. He described NVIDIA's recent quarter as a masterpiece and believes worries about the AI bubble should be thrown out the window. According to him, we are still very early in the AI cycle, with demand for NVIDIA chips far exceeding supply, and massive spending still ahead over the next 2 to 3 years. So, what do you think? Is NVIDIA set for a huge 2026? Leave a comment and let me know what you expect for the year. There are also 3 stocks I've never covered on the channel before that I've been looking into recently and may make a video about. These stocks are Vertiv Holdings, a global provider of critical digital infrastructure for data centers and other industries. MITI Group, a global leader in technology-enabled integrated asset protection, and Pagaya Technologies, an AI fintech company that has been severely beaten down recently. Each of these is seeing strong growth and has a very low forward pay ratio. If you'd like to see a video on any of these, leave a comment and let me know. As always, these videos are for entertainment purposes. I'm not a financial advisor, and this is not financial advice. If you enjoyed this analysis, then like and subscribe, and I'll catch you in the next one. It's been a strange year for NVIDIA. Today, NVIDIA stock sits at $180, up 29% this year, making this the slowest year since the bear market of 2022, where NVIDIA actually dropped nearly 50%. But NVIDIA is set for a big 2026, and recent developments mean that this is starting right now. Before we get into it, I'm not a financial advisor. This is not financial advice. These videos are for entertainment purposes, so if you enjoy them and want to see more videos, then drop a comment and let me know. Now it feels like a long time ago that I was calling out NVIDIA as a bargain at $100, while so many people were saying that the AI bubble was bursting and that stocks like NVIDIA and Palanta would continue to crash. But that has not happened. Today, NVIDIA sits at $180, down from its all-time high of $212, but heading into one of the biggest years in the company's history. So if you enjoy these videos, please hit the thumbs up. It really helps support the channel. I'm aiming for 500 likes, so let's see if we can hit that goal. Now, let's get straight into it. Now, we all know what NVIDIA is and what they do. NVIDIA is a leading technology company whose biggest growth today comes from data centers. While it began in gaming graphics, NVIDIA is now central to how modern data centers run artificial intelligence and high-performance computing. In data centers, NVIDIA's GPUs are used to train and run AI models, process massive data sets, and power cloud services. These chips are the best in the business, and major cloud providers and enterprises rely on NVIDIA's hardware. Beyond chips, NVIDIA provides a full data center platform, GPUs, high-speed networking, and software such as CUDA and AI frameworks that make everything work together. In short, NVIDIA isn't just a chipmaker. It's the key infrastructure provider for AI-driven data centers worldwide, and this has led it to become the biggest company in the world. The stock has soared more than 1,200% in the past 5 years. But is NVIDIA set for a record-breaking 2026? Right now, we are still at the very early stages of a massive $3.24 trillion AI infrastructure spend by 2030, as the world witnesses the biggest technology shift in decades, and NVIDIA is at the forefront of this. Looking at the recent earnings presentation, NVIDIA recorded $57 billion in revenue, which set a record quarter-over-quarter growth of $10 billion. 3 platform shifts are on the path to between $3 and $4 trillion in annual AI infrastructure build. Data center revenue accounts for over 90% of NVIDIA's total revenue. And while there has been a massive quarter-over-quarter increase in revenue, the margins have dropped ever so slightly from 75% down to 73%. But NVIDIA has set guidance for the next quarter of $65 billion in revenue and a gross margin back up to 75% again. On the list of top Magnificent 7 stocks to buy in 2026, NVIDIA is number 1. There is a very interesting article asking, will NVIDIA stock double in 2026? 2025 has been lackluster compared to the 2 previous years, where the stock more than doubled. In 2025, it's up only about 30%. One of the most important factors is whether NVIDIA is correct in its estimate that global data center capital expenditure will reach between 3 and 4 trillion by 2030. That is up significantly from around $600 billion in 2025. Should AI spending continue to trend in this direction, NVIDIA's stock will continue to outperform the market, making it an excellent stock to own. But is that enough for the stock to double? Trading at 38 times forward earnings, the stock is not cheap. But it's not actually that expensive either if you factor in their projected growth rates. Today's price could look very cheap if 2026 goes to plan. Let me explain by first looking at some vital news that could drive the catalysts for next year.